Good morning, investors and traders. This is Naim Azam, Chief Market Analyst at AvaTrade, and welcome to our daily update on our YouTube channel. So in today's segment, what we will be discussing will be like what exactly is happening with the market, because obviously over the weekend we had a lot of news in relation to Brexit and of course in relation to stimulus aid package as well. So we need to incorporate all of that in terms of a price action and how all of that is really going to impact the stocks. So to begin with, of course, the lawmakers, the US lawmakers have finally come to their senses, and then they have decided that, look, you know what, this is now the time to pass the second stimulus aid package. Now, traditionally speaking, that should have boosted the sentiment among investors and traders, because the second stimulus aid package, what we've been talking about for a long time, and the market has been waiting for it. So this should have really boosted the futures and the confidence in the market. But that is not what we are seeing, because what I am seeing in the market is the US futures trading lower. They are trading lower by over 100 points. And when I look at the daily chart for the Dow Jones index, I can still see that the price is very much consolidating, but today's move is very much skewed to the downside. In terms of a Bollinger Band, the prices are trading very close enough to its 20-day simple moving average within that Bollinger Band. So this indicates that yes, okay, the move is predominantly to the downside, but the damage isn't really that big. But the question is why the markets are moving lower when we know that the second stimulus aid package has been approved. The reason that we are seeing the markets trading to the downside is primarily because of the surge in coronavirus cases, and of course in the UK we have a new strain of this coronavirus vaccine, which is very much making traders and investors nervous. Now, because of that, what I am seeing in the European market is a major move to the downside, and indices like FTSE 100 index is very much under a lot of pressure, and then it is selling. It is really moving to the downside today, because remember, over the last few days we saw this massive surge in the FTSE 100 index based on the optimism that yes, you know, perhaps a Brexit deal can happen, and that also boosted the bets for the euro dollar, for a sterling dollar as well. It went well above the 1.35 price level, but now sterling dollar has taken a massive beat, a massive sell-off, has been under a massive sell-off. Now it is trading at 1.32 against the dollar, and of course sterling, the FTSE 100 index on the weekly time frame is also experiencing a pretty big sell-off today. In fact, on the weekly time frame, when we look at it, you know, the prices have moved below the 20-day moving average, but nonetheless still trading above the 50, 100 and 200-day simple moving average, and the price hasn't pierced the Bollinger Band, the lower line of the Bollinger Band as well. So still pretty much indicating that yes, the overall recovery is still very much in place. So moving on from here, the tier 4 lockdown in London, which is very much the dominant force behind this current sell-off, is going to remain in focus. Traders are going to see what the government is really going to do with respect to the lockdown. Is it going to be more further help in terms of economies, because now London is under full lockdown, meaning nothing is really open in London, and that is again, once again, a huge problem for economic recovery to take place. And does that mean that the Bank of England will provide further stimulus as well? So a lot of questions in relation to that. But overall, the sentiment is very, very weak in terms of a stock market, and that is pretty much the focus among investors and traders. That's all for today, and I'll see you guys next time.